Hi everyone, and welcome back to my channel, The Money Blueprint. I'm your host Michael, and today we're diving into how to spot the early signs of a crypto bear market in plain, everyday language. Whether you're a new investor in digital assets or just curious about how market trends unfold in the world of cryptocurrencies, by the end of this video, you'll be equipped to recognize those subtle warning signals that often appear before a downturn. So let's jump right in and learn how to read the crypto market's mood before it takes a sour turn. And if you haven't already, go and watch my previous video on crypto bull and bear markets. So what is a crypto bear market? Let's dive right in. So, a crypto bear market is typically defined as a prolonged period when the prices of major digital assets, like Bitcoin, Ethereum, or leading altcoins, drop by 20% or more from their recent highs and continue to decline over a sustained period. Importantly, this steep drop doesn't happen overnight. Often, subtle signs begin to show well before the dramatic plunge. Recognizing these early indicators can help you manage risk, adjust your strategy, and even spot potential buying opportunities down the line. In simple terms, these signals help you understand when widespread optimism is starting to give way to mounting fear. The first early sign to watch is a progressive drop in prices over time. In the early stage, you might not see a full 20% decline yet, but you start noticing that cryptocurrency prices aren't rebounding as quickly as they used to. For instance, if you track Bitcoin, Ethereum, or your favorite altcoin, you might see these assets repeatedly testing new low levels without strong recoveries. This pattern suggests that buyers aren't stepping in with the same enthusiasm as before. Technical indicators such as moving averages and declining trading volumes can help reveal these trends, signaling that the short-term momentum is turning bearish. The next sign looks at the shift in the market sentiment which comes from the collective conversation on crypto forums and social media. As a bear market begins to take shape, you'll notice a shift in sentiment across platforms like Twitter, Reddit, and those specialized crypto communities. Increasingly, headlines, analysis, and even memes start to reflect a growing pessimism. When you start to hear more discussions about risks and bearish outlooks instead of hype and optimism, it's a pretty clear indicator that fear is creeping in. This change in sentiment can actually become self-fulfilling. As more investors exit their positions or move into stablecoins, prices are driven down even further. Thirdly, we look at the regulatory and macro signals. In the crypto space, regulatory news often plays a major role. Early signs may emerge from tightening regulations, increased scrutiny from major economies, or even announcements from government agencies that hint at stricter oversight of digital assets. Additionally, broader economic factors such as market liquidity issues or high-profile security breaches, think major hacks or exchange downtime, can also diminish investor confidence. These factors, combined with negative shifts in crypto sentiment, can really contribute to an environment that's ripe for a bear market. Another key early indicator is heightened market volatility. If you're noticing that crypto prices are swinging more dramatically and unpredictably, it's a sign that uncertainty is mounting. Many traders utilize technical tools like the Relative Strength Index or RSI to gauge whether a market is becoming, oversold. When these tools indicate an oversold condition, it may precede a prolonged downturn. Additionally, familiar bearish chart patterns, such as descending triangles or the evening star formation, can serve as clues that the rally is losing steam. While no single technical signal can confirm a bear market is coming, they certainly add weight when combined with other signs. So let's ground these ideas with a recent real-world case. In early April 2025, following a series of unexpected regulatory announcements from major economies, crypto markets reacted sharply. For example, Bitcoin fell nearly 20% from its February peak, pushing the market to the brink of bear territory. Prior to that dramatic drop, there were several subtle signals. Prices across key cryptocurrencies were underperforming, Pessimistic headlines began to dominate crypto news feeds, and the overall mood in online crypto communities had noticeably soured. This episode perfectly illustrates how early signals, when combined with a triggering event like regulatory clampdowns, can foreshadow a significant market downturn. So, how do you piece all these signals together? The key is not to rely on one indicator alone. A single day of price dip might simply be normal crypto volatility. Instead, look for a combination consistent price declines, a clear shift in market sentiment online, negative regulatory whispers, and heightened technical volatility. When these indicators start aligning, it's a strong sign that the crypto market's mood is shifting from optimism to caution. Tracking these multiple data points is your best defense against false alarms, and will help you time your response more effectively. Knowing these early signs is only half the battle. What you do next is equally important. First, consider reassessing your crypto portfolio. Diversification is crucial. Spreading your investments across different cryptocurrencies and even including stablecoins can help buffer against extreme volatility. Some investors choose to hedge their positions using crypto derivatives or simply shift into less volatile assets until the storm subsides. Above all, avoid panic selling. Use these early warnings to adjust your long-term strategy, whether that means rebalancing your portfolio or setting stop-loss orders to protect your positions during turbulent times. To wrap up, spotting the early signs of a crypto bear market involves paying attention to subtle price trends, shifts in online sentiment, emerging regulatory or security issues, and technical indicators pointing to increased volatility. Our example from early April 2025 clearly shows how these factors can converge to herald a significant downturn. By staying alert and maintaining a cool, level-headed approach, you can protect your investments and take advantage of potential opportunities when the market eventually stabilizes. If you found this video helpful, please don't forget to hit that like button. Subscribe for more insightful crypto market guides, and drop your thoughts or questions in the comments below. My name is Michael, thanks for watching and supporting the Money Blueprint, and here's to smart, informed crypto investing.